Ladies and gentlemen, welcome back to another Bitcoin update. Today we're going to be discussing the short-term developments on Bitcoin, the medium-term developments on Bitcoin, the bear case on Bitcoin. We've actually seen, surprisingly, I know the price hasn't moved too much, but we've actually seen quite a lot occur. We've got a unique triangle formation forming, which could be indicative of major downside or upside price action within the next 24 hours, or at least a kickoff to the move in terms of major upside and downside price action. So big stuff there, and that's actually going to help us a lot in predicting the future price action for Bitcoin. It's going to help us a lot in our buying strategy. We've shifted up a few things there, so very important in that regard. We're also going to dive into S&P 500 and DXY, looking into the correlations between that and Bitcoin, what's going on there. And then the second part of the video, after a short advertisement, we'll be diving into some community questions. Now, these questions, honestly, are probably more important than the first part of the video. The questions answer quite a lot. They answer what I believe about the Bitcoin ETF. They answer why am I buying where I'm buying? When am I selling in the next bull market? What do I think Ethereum will reach in terms of price target? Will it reach 10K or not? And then also, basically, another question which is very interesting is, why am I not buying now? Why would I wait for a breakout or wait for a breakdown before buying? If I'm so bullish on Bitcoin, why am I not just buying right now at this price? So quite a lot to answer in those community questions, quite a lot to look into short-term, medium-term, big video in general. So guys, without further ado, check out the timestamps and kind of shift around if you don't want to watch the full video, but I recommend you do. There's a lot of information here. Thank you for watching in advance. Let's get into it. Okay, guys, we have some short-term developments, of course, so we need to be looking at the daily chart, looking at what will happen exactly if we lose the RSI line. We have a triangle that's formed on the 4-hourly chart that's different from yesterday, and so we'll be looking into that. That's actually a very important triangle, to be quite honest with you, and it represents quite a lot for the Bitcoin structure right now, because we obviously have a downtrending major line and then a major support zone in green, and we'll be looking into what that triangle means for those lines. We'll be looking into the weekly chart, specifically focusing in today on the volume profile, which we haven't done much in the past. We'll be looking at the S&P 500, also the DXY. Both those charts are interesting right now because they're deviating quite massively from what Bitcoin is doing, and we'll look at the bear case, which we haven't looked at in quite a while, but we have been speaking about the bear case for a long period of time. We just haven't actually updated our opinion on it for a while. So obviously, you know, five or six charts to look at there. Before we get into it, guys, check out the VIP group on Telegram. VIP information and results group, you can find it. This is the one I'm looking at right now on the screen. You can see in this group, you can join for free, and essentially you can basically look at what you get from buying the VIP membership, 3 months, 6 months, or 1 year, 150, 250, or 350 USD. So all the pricing is there. It's very transparent, and it's also transparent in the sense that you get to see what the trading results have been historically. This document right here that I'm rolling my cursor over shows you exactly what our trading results are. We've got a 79.12% win rate, which is absolutely exceptional. That's 4 out of every 5 trades reaching profit. So check out the VIP group on Telegram. If you want to make some money on altcoins or are interested in trading altcoins or getting trading tips on altcoins. So there you go. There's VIP. Let's get into the content now. So basically, I'm also going to be looking, sorry, I forgot to mention this. We're also going to be looking at community questions. I've got 3 questions I want to answer from a community post I did yesterday. So we'll answer those questions towards the end. But yeah, basically, make that 4 questions because we're going to answer this question here. From another proud Australian right here. All right, so before we get into any questions, obviously we need to do the TA analysis. So what is going on with Bitcoin right now? All right, I'm not going to waste your time talking about all the stuff I've talked about in every video for the last week, basically. We know already, we know for a fact, there's no point talking about it anymore. We know for a fact that Bitcoin has a very major support zone at 24.5K to 25.2K. That's the green box here. We know that. Everyone knows that in the market right now. It's the dividing line. It's the line in the sand. We go above that, we're in this range here, which is a good range. We go below that, we're back in the bear market range. Everyone knows that by now. So major support, 25.2K to 24.5K. We also know we have a major resistance zone at 32K roughly. You can see the second highest red box on the screen here. In fact, I'll make it a pink box. You can see it quite definitively. The pink box on the screen is a dividing line between the bear market territory and the bull market territory, essentially. And so basically what I just said, simplified, is that we have major support to the upside, 24.5, and major resistance major support to the downside, 24.5, and major support to the upside, major resistance to the upside at 32K. All right, if I can speak English, that would be great. All right, so let's continue off the analysis. Now that we know the major zones, we know this red box up here is the major resistance, we know this green box down here is the major support, we can hence start to look into what we're going to do in regards to that support and resistance. And obviously right now we've been testing that support for a long period of time. We saw one deep liquidity wick into that support box in the same fashion that we saw a deep liquidity wick into the support box before an upwards trend formed over here. Also in the same fashion that we saw a deep liquidity wick into the support box in 2021 before an uptrend continues. So generally speaking, you generally see deep liquidity wicks into support, okay? In this case, it's not really a wick, it's more of a candle close into support before the trend reverses. That's exactly what we saw just about 2 weeks ago. And so realistically, we shouldn't have to go back down into that green support box again. I've spoken about this a few times. It would not be good if Bitcoin goes back down to retest the support. There's no reason for us to have to do that. We've already seen a deep liquidity wick in the same fashion we saw it over here in 2021. So going back into that green box, although it wouldn't confirm a breakdown, because only a breakdown can confirm a breakdown, right? Only a weekly candle close below this level can confirm an actual breakdown. But we can say for certain that if we were to drop down and go back into this region, it wouldn't be good, that's for sure. And this is where this triangle comes in on the 4-hourly chart, because basically, what would lead to a drop back down into this green box? Well, a break from this triangle would. Okay, essentially we have a triangle forming now, a symmetrical triangle formation. Technically, it's not bullish or bearish because we've seen sideways consolidation into it, so technically it's not really bullish or bearish pattern, but we have a triangle formation forming on Bitcoin that is stemming here from 12th of September through to 25th through to 27th, and from the upside, it's stemming from this candle close, through to a couple weeks on the 21st and 20th, and then through to a week here on the 25th. Okay, so we have a triangle formation forming. That triangle formation is quite important, because if the triangle formation breaks to the downside, all right, two things can happen. Either we will form a new pattern and we won't actually go down as much as we expect, or we would go down and test 25.7k, and if we don't hold that, we'd be going down to the green box. And as I said before, if we go down to the green box, if we retest this low, there's no reason for us to have to do that, and we won't look very good. You can imagine what the structure will look like if we go down and test the green box again. What will it look like? Well, we go down like this, right? And that would form a massive, all right, rounding top formation, or a massive rounding pattern, okay? And that's not good at all, because that pattern, that rounding pattern that we would see if we would go down that green box, would have a measured move from the neckline downwards, okay? That downwards move would lead us to go to around 22k, all right? And 22k, okay, is actually where the bear scenario, as per this head and shoulders pattern on the 2023 chart, that's where the bear scenario would indicate we find support on this yellow line, which is around 22k. I want to explain that one more time, because I went through a lot of information very quickly, and I want to hold your hand through it so you don't lose track of what's going on. That's not an insult to your intelligence, it's more of an insult to my explanation skills. But look, here's what I'll say. We have a triangle formation. I'll say it one more time. We have a triangle formation forming. As you can see, a triangle formation stemming back here from 12th of September. That triangle formation is very important, because we know that if we retest this green box, we're not in a good position. And we know that if we break down from a triangle formation, we won't be only breaking down from a triangle, we'd also be breaking down from the daily chart RSI zones. You can see the daily chart RSI, breaking down from both of those would be bad, we'd enter a downwards trend, okay? So if we break down from a triangle, we will gain massive selling momentum. That selling momentum very well could take us down to this green box. If we touch this green box, we're not in a particularly good position, because we don't need to, first and foremost. And second of all, we would be forming a rounding top formation, which is bearish. That rounding top formation would give us a measured move, okay, from the neckline roughly over here, applying to the breakdown, if we do break down, to around 22k. And we do know as well that the bear case, which is basically this head and shoulders pattern on the logarithmic chart, right, targets, it has a measured move, okay, of roughly this yellow line over here, okay? Now, obviously, we're a bit deviated from that at this point in time, but that's the fact of the matter is, the yellow line would be the nearest major support, okay? And that is at around 22k. So if we do go downwards here on Bitcoin, we do break this triangle to the downside. As I said, two things can happen. It can play out very badly. We can form this rounding top formation, we can go downwards throughout the bear case, and we can break below 24k. Or we can hopefully find support at this red line and form a higher low and go upwards. So basically, if we break the triangle down, there's two scenarios, all right? But we don't want to even have the possibility of forming one of those scenarios that is bad. So ideally, we just break the triangle to the upside, we go up to the yellow line, and we break to the upside from there. All right, that's the ideal scenario. If Bitcoin can break upwards from this triangle formation, that would be the ideal scenario. If it breaks down, but it's not the end of the world technically, but it's certainly not putting Bitcoin in a good position at all, and it certainly flips our bias to slightly bearish at that point. But I personally, as I've said for multiple times, so I hope that gives you some clarity in the short term. It's actually a very useful analysis there. But I've personally said multiple times, and I'll continue to say this, I personally will not be buying or selling Bitcoin in this price region. I will only be selling Bitcoin or shorting Bitcoin below this green box, and I will only be buying Bitcoin or adding to my long position, whatever it may be at that point in time. I don't know whether I'll be in a long position or not, but I'll certainly be buying more Bitcoin if we break above all these yellow lines, which would be a break above, by the way, bull market support band, which would be a break above 200-week SMA. So there's quite a few. It goes deeper than the daily chart. It goes deeper than the 4-hourly chart right now. Even on weekly chart, we can see that there's layered support, there's layered resistance. Everyone knows this by now, okay? Look at the volume profile on the side of the screen. We've got layered resistance, we've got layered support. That's the fact of the matter at this point in time. And we've also got, things like Gaussian channel supporting 24.5K. We've got things like bull market support band supporting the upside resistance. So this is why I'm very, very adamant to my position about fence sitting right now. I'm on the fence. And the reason I'm on the fence is because I'm not willing to make a decision clamped in a range like this. These are two major indicators we have to the upside and the downside, okay? I'll make a decision when we're above this red level or below this level here, right? That's the best time to make a decision because everything is risk-reward ratio. Yeah, it's all good having maximum reward, but if you have high risk, maximum reward doesn't help you, okay? It's good to have a balance between risk and reward, and that's what we're doing here by sitting on the fence. We're waiting for a decisive move, and, we've discussed this multiple times in the past. And I'm sure you guys are sick of hearing it by now, but that's the reality. We have to keep talking about it because if I don't talk about it, people forget I said it, and that's the reality of YouTube. So basically, I'll be giving you guys an update on this triangle tomorrow because by tomorrow it will have broken out. So tomorrow I'll give you an update on this triangle formation, whether it's an upside break, a downside break, or whether it leads to nothing in particular, which is actually a very real possibility as well because realistically, we could easily form a separate pattern from this. We could form something like a descending wedge. And that's why I said it's very important that Bitcoin, in order to validate a bear case, breaks down from this red line as well. All right. We can't just break down from a triangle, enter our shorts and say it's over because that's not really how the market works. You can very easily start to form different market patterns. But at this point in time, this is the market pattern that is valid. It doesn't mean it's the one that will remain valid. I know that's not what a lot of people like to hear, but that's the reality of the market, guys. That's how it works. So, that's another reason why I'm on the fence. I don't think this market pattern is as concrete as ones we've seen previously. But yeah, S&P 500 and traditional markets, I want to briefly look into them because they're actually very interesting right now in the sense that they're not doing anything important at all. They are doing something important, right? S&P 500 is looking pretty bad. I mean, we've seen some sort of head and shoulders pattern formation. We've come down, but right now we're on support, okay? We're testing these pink lines, pink uptrending lines, stemming back from 2022 October and 2022 September. So we do have support right now in the S&P, but overall, I don't think it actually matters at all. If you look at when the S&P started downtrending, it started downtrending in July. And in July, if you look at where Bitcoin was in July, yeah, it was up here in the peak, but you look at the most recent price action on S&P, it's deviated quite massively. I mean, we started a fresh downtrend in September, and if you look at where Bitcoin was in September, all right, you can see in September, Bitcoin was actually down here. So when the S&P started a fresh downtrend, through which it's gone down on the second leg, Bitcoin actually started a fresh uptrend. So for the last month or so, the S&P 500 has meant not a lot for Bitcoin at all. Really at all. And even if you zoom out even further, you can see that, you go back to March 2023, roughly over here, we've gone upwards massively on the S&P. In fact, the vast majority of the upwards move over the last year and a half has been from March. And in that period of time, Bitcoin's just gone sideways. So I actually don't think the S&P 500 is relevant right now for Bitcoin. I've been saying this for over a year now. I've been saying that the correlation between S&P 500 and Bitcoin is minuscule. I believe the cyclical structure is more important than the S&P, and that's reflected in the DXY, because the DXY, much like the S&P, is meant to be correlated to Bitcoin, except the DXY is meant to be reverse correlated to Bitcoin. And the DXY has been seeing a massive upwards move for the DXY, okay? Pretty big, since July, right, which means Bitcoin should have been going downwards. And yeah, Bitcoin did see the initial downwards move in July, like we've been saying, but if you zoom out even further on a macro scale, since March, okay, the DXY has basically gone upwards, all right, since March. Just gradually gone upwards, but mostly sideways. And Bitcoin basically has gone downwards. So the fact of the matter is, yeah, I guess you could say there's a loose correlation. They've both gone sideways, but the S&P, there's certainly no correlation. The fact of the matter is the correlation, although existent, is weak. And even if you're looking at it as if it is still there, you should actually be bullish on Bitcoin in that regard, because the S&P 500 has just reached a support zone. Yes, the overall macro structure is bearish, but this is where I get into what I said before. Right, here's the thing, right? Here's the thing about S&P correlations, traditional market correlations, that most people don't want to speak about. The fact of the matter is, if Bitcoin is correlated to traditional markets, which it has been historically, right now it's actually not confirmed at all, but it has been historically, that's undeniable. Even if Bitcoin is correlated to traditional markets, right, it should reflect in the TA, right? Bitcoin will not look bullish if the S&P is bearish and they are correlated. That is not how they work. If they correlated, they both should look bearish. And Bitcoin right now is basically hard to tell. It's on the fence. And so the correlation is irrelevant. The fact of the matter is every correlation that exists should reflect on both of the charts. It's not reflecting on Bitcoin right now. The reflection on Bitcoin right now is neutral. Therefore, the correlation is weak. All right, and we should be trusting Bitcoin. That's my opinion on that. And look, even if I'm wrong, even if I'm totally wrong, and I know a lot of people disagree with me on that, even if I'm totally wrong, and even if the S&P 500 correlation is stronger than ever, the fact of the matter is you should still be trusting the Bitcoin chart, because it's Bitcoin you're trading. And right, even if the S&P 500 correlation is massive, it should reflect, as I said before, it should reflect on the Bitcoin chart, and it should lead to bearish TA on the Bitcoin chart. Therefore, you should be able to even get away with just trusting Bitcoin, right? I never understood why people trust traditional market charts more than the chart they are trading. If the traditional market chart has such an effect on Bitcoin, it will reflect on Bitcoin and it will make Bitcoin look ridiculously bad, which means you should be able to just trust Bitcoin alone. It's very simple. People love to overcomplicate things. It's not that complicated. That's why I don't look at traditional markets too much, especially in the last year or so. Perhaps when the bull market comes again, or perhaps when printing starts again, it will start to matter a bit more. As of right now, I really don't think it matters a massive amount, but that's my opinion on traditional markets. All right, guys, so before I go over and look at these questions here, quite a few questions to answer, not really too many, right? 4 questions to answer. Before I look at these questions, I want to quickly take a quick 60-second break in the video. Let's check out the Bitget and the BingX exchange. Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have 2 exchanges for you guys, 2 options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got BingX, that's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right, with a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on a good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video. All right, so let's start out here. Give some quick answers to these questions here without bringing up charts if possible. Hey, Wolves. This is the first question here. He said, hey, I've always wondered if you personally hold Bitcoin. I know you're a trader, but do you have a long-term Bitcoin position that you never sell? Not that I'd never sell. I don't have a position that I'd never sell. I'd always consider selling things. I feel like if you get into the mindset that you're never going to sell something, you enter a massive cognitive bias kind of space. So I don't believe in the idea of never selling or never doing anything, really. I mean, you should be adjusting to the situation and reacting to the situation accordingly. So not that I'd never sell, but I certainly do have a long-term Bitcoin bag that I cyclically trade. It's not like I hold it forever. I cyclically trade it. So, for example, I've been buying, and I bought incrementally in certain strategic positions as I've publicized on this YouTube channel since the bottom, right? Since November or December last year. Literally since, 16K, I've had my first buy. And so, that bag I've still got, and I've still been holding that bag, and I've, again, incrementally been adding to that bag at certain strategic locations, and again, I will incrementally add to that bag probably some more. But overall, when Bitcoin dominance starts to decrease in the bull run, and when dominance starts to shift into altcoins and Ethereum, which could be happening as soon as late next year, then I'll start shifting out of my Bitcoin bag and shifting money into Ethereum and altcoins. And then when the top comes in, I'll shift money out of that, and then I'll buy Bitcoin back at the bottom a year later. So I don't necessarily have Bitcoin that I hold for forever, unless there's a strategic reason in my personal financial life, I guess, why I would do that. But I do certainly have long-term Bitcoin bags. I don't just scalp trade. There's only so much you can scalp trade. There's only so much money you can use in scalp trading, and it's very risky to have it in 100% portfolio in scalp trading. It's also not really possible, because if you think about what scalp trading is, right, if your position size is too large, you're going to get stopped out by whales, right? You're going to get scammed, Wick. And this is what a lot of people don't understand. They think you can just scalp trade with $20 billion. It's like, no, there's a maximum to how much money you can use in scalp trading. And that's why scalp trading in crypto is not actually that scalable. It's scalable to a certain extent, but once you're scalp trading with, $30,000, $20,000 positions at, multiple X leverage, 10X, 20X leverage, 50X leverage, you're actually in very, very risky territory because that is an order size that is going to be hunted by whales. So as I said, there's only so much you can scalp trade. You're going to have to diversify into long-term bags eventually. And so yeah, I do have a long-term bag, but it's not necessarily a bag I hold forever. Do you believe Bitcoin ETF could alter slash break the traditional 4-year cycle, leading to shorter bear markets and accumulation phases? I don't believe that would be a direct result of one particular thing like an ETF. I think people do overemphasize slightly the utility of ETFs and how much ETFs will be used. I think the vast majority of crypto investors and traders will still continue to use crypto exchanges. People generally do understand that not your keys, not your crypto. I think that ETFs will become popular to a certain extent during the bull run itself, not during all phases of the Bitcoin cycle. And I also believe that ETFs will only become exceptionally popular if exchanges become harder to access for regulatory reasons, which is very, very possible. I don't believe that Bitcoin ETFs will be exceptionally popular. I think they'll gain traction, that's for sure, and they'll certainly be a boost to the market, and they'll certainly support the 4-year cycle theory. But I don't see why it'd break the 4-year cycle theory. All right. I don't actually see any reason why anything in particular at all would break the 4-year cycle theory. I think the 4-year cycle theory is something that we can react to it breaking when it breaks. I think predicting its break is kind of dumb. How can we predict something is going to break that's never broken before? Based on what? Based on speculation? Okay, cool. So it means nothing. It's just an opinion. It doesn't mean anything. I'll react when it does break. But yeah, ETF, I mean, it certainly could do something, but the fact of the matter is what could happen is irrelevant. What happens is relevant. And I know that's a vague answer, but that's what I'm going to go with, to be honest. Also, I'm considering adding a significant Bitcoin position because I sense a major move coming in the coming months. Would you advise waiting for a trend break first, even if I expect it to hold until late 2025? That's based on your personal risk tolerance. My friend, I can't tell you exactly what you should do. I don't know your personal financial situation. I don't know what your goals are in cryptocurrency. I can tell you what I'm going to be doing. And this is what I'm doing as someone who already has a Bitcoin bag. I'll personally, as I said, be waiting until the break to the upside occurs, until the break above bull market support band on the weekly chart occurs. That's what I'll be doing personally. But that's it's up to you. If you want to hold for a long period of time, you got faith in the 4-year cycle, that's up to you. But I can only tell you what I will do and what I suggest is the best thing to do to a person of which I know nothing about. That's what I'll say. But am I macro bullish on Bitcoin? Yes. What's the next buying opportunity if your average price is currently 35k? So I'm assuming your average price is currently 35k, and the next best buying opportunity, as I said, I can't tell you what to do. I can tell you what I'm doing. In my opinion, the next best buying opportunity in terms of risk-reward ratio, based on what I generally do in my strategy in the market, would be a weekly candle close above bull market support band. That would be my next best buying opportunity on Bitcoin. And then above that would be 32k break. Cool. Do you think Ethereum can reach 10k in 2025? I think it certainly can. Now, the problem with Ethereum is it doesn't have much macro data, so it's very hard to make any precise macro predictions in any regard whatsoever. So I want to make that very clear. It's not like I'm ever going to have a specific Ethereum price target. There's actually no way I could. In fact, there's no way anyone could. If anyone comes to you and says that I have a specific Ethereum price target, right? That's literally just straight up a lie, because there's no macro data to suggest that you can have any specific price target whatsoever. It's simply impossible. But what I will say is this. Ethereum went up 64x in the last cycle. Will it go up 10x in the next cycle? I mean, from a 64x to a 10x, it seems reasonable to me. It also seems reasonable considering the all-time high in the previous cycle was 5,000. That would only be a 2x from the previous all-time high. It seems very reasonable that Ethereum will reach 10k just based on blind speculation, not based on any data. Yes, it seems reasonable that would happen. That's my opinion. All right, we also have a question here, as you can see, from this guy here. All right, so another proud Australian, as you can see in this comment section here. He says, I thought let me try to read this properly. If the objective is to sell at Q4 to 2024 to Q1 2025, why not buy now? So he's basically saying, because my objective on Bitcoin, as I said before, is basically to sell when Bitcoin dominance starts to drop and shift into other assets like Ethereum, like altcoins, at least with a decent chunk of my Bitcoin. So he says, if basically your objective is to sell next year or Q1 2025, why not buy now? We all know there will be a higher price position compared to now, because as much as I believe in the 4-year cycle theory, all right, and as much as I believe in, the trends, I still need to trust the charts. And yeah, you could say, okay, what about the macro charts? But I would still kind of say to you that, look, I've already got a Bitcoin bag. I've already bought my Bitcoin. Everything I'm saying in this channel is kind of in regards to what I'm doing personally. I've already got a massive Bitcoin position. I don't need to buy more Bitcoin, but I want to, but I don't need to. Now, I also don't want to overly expose myself to risk, because as much as I believe in the 4-year cycle theory, again, it's based on my personal risk tolerance, as much as I believe in the 4-year cycle theory, I also understand that there is a chance the 4-year cycle could be broken. And if we drop below 24.5k, it's not like I believe the 4-year cycle is going to be broken, but I certainly don't think Bitcoin looks good. And I certainly think that's a double top formation there. And I certainly think there would be a risk of us going much lower, in which case I could buy at a much better price. So why would I waste my money on Bitcoin buying here at 26k when I'm on the fence about the price action? I believe there's a decent possibility we go downwards, and hence I could use that capital buying lower, or I could just wait for an extra 5% move to the upside and buy there. It's like, why would I rush into a buy right now? Even though I know Bitcoin is macro bullish, there's no reason to rush into a buy right now when I can just buy 5% higher, or I can buy 20% lower and get a much better price. The logic behind buying right now instead of waiting for a move doesn't add up to me. Because here's the thing. A lot of people believe that if you're macro bullish, you shouldn't care about the price you buy at. I completely and utterly disagree with that. As much macro bullish as I am, I still believe in getting the best possible price, and I still believe in reacting to short and medium term TA. Therefore, I'm going to wait for a 5% move to the upside before buying. I'll risk losing out 5% of gains, it's nothing. Or I'll get a much better price at 20% down. If I was like 90% bullish right now, I believe the market would go up. Yeah, it's a different story. But I'm not. I'm on the fence. So why would I not just wait? I just wait to see what happens and then react based on the situation rather than blindly buying and hoping for the best. That's my answer to that question. I think that makes a lot of sense. So, guys, those are the questions answered. Thank you for watching the video. Check out the Crypto Academy Become a Trader 10-unit course if you want to learn TA, if you want to learn how to trade like I trade. This course was not only developed by myself, but it was also developed by Megawell Crypto. You might know him. He's quite big in the space now. His YouTube channel is about 11k, 12k subs. I've been working with Megawell quite closely for the last 2 years, essentially. We made this course together, as you can see. We're the only owners, the only operators, the only founders of this course. Check out the information on the website. All of the bios there, all of the course information's there, and ultimately you can throw us an email at cryptoacademycourses@gmail.com and we'll get back to you with all of the relevant payment information promptly. So guys, thank you for watching. Hope you enjoyed, and I'll catch you in the next video. Cheers.